Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Traders, further to the previous video I just did on gold, we've had this dip down, taking out liquidity below this previous low, and now we're starting to rally. Let me explain. We'll go down to maybe a 5 or even a 15, but this could be an opportunity here now to get involved, right? But you want to be careful. You want to mark up the price gaps. This is your balance area down here. Okay, we get this strong impulsive move, thin candle. Notice the candle left and the candle right. Okay, so we don't have any fill until it wicks back down and looks to rebalance. So there's still this unresolved section. This is on the 5 minute. So you want to consider the possibility that this wicks back down in to resolve this. I mean, it may or may not. If you're a conservative, just let this set up and wait for a break and retest of this, as I was talking about in the previous video. But what I'm seeing here, this dip down looks to me like smart money is tapping into sell side liquidity so that they can take this back up into these levels here. I mean, could be wrong, but I've seen this so many times in the past, and this is generally a move, right? But we need to see this trade further up and establish maybe a break above these highs at least. You want to see it start moving here. So if we go to the 3 minute, give this a chance to establish and get above these highs, I would say. And then you want to see the break, retest and fail of this level. Now the other thing with this, if we bring in our indicators here, you can look for these opportunities. There was this one. It was the first dip down that I mentioned. If you want to scalp this on the lower time frame, you look for this dot alert accompanied by these divergence lines, and then we get that. This pullback here is your opportunity to go long, and you can get in a little bit earlier if you open a 1 minute chart as well. That will get you in probably back in here. If you're going to trade this, well, actually have a look at my other gold video. There's one I did previous to the last one, and I talk about this strategy, scalping day trading. Right, so we're on a 3 minute chart. If that's the case, you see the dot, the divergence, the break, and then you wait for the pullback down, you buy, and this is the most important part of this is, well, you know, your stop loss is going to go below the previous low here. Your risk must be consistent across the board. Target one, okay, this is your risk. Whatever you're allocating percentage-wise to your position, to your risk. I mean, if you're just trading gold and you're risking 1%, that's a lot. But you have to make that consistent throughout. So let's just say, for example, after this signal, the pullback down, let's just say, you know, you went for a stop loss down here, 1-to-1 risk reward. This distance here, or this range, whatever you're risking, it might be 1/4% or 0.5%, but keep your risk consistent. This is really important. One way to blow your account is to risk different lot sizes. You're looking for 70% off at target 1. You leave 30% running. If you have a 50% win rate, whatever. If this is consistent, it allows you to manage your trades. You can manage your risk well. So keep a handle on risk management. Now the other opportunity to trade this was off this signal here. Okay, we got that. That's telling us that the market's overextended. We wait for the triangle, the pullback down. We're looking for this thin candle, the move back down to fill the gap. Okay, so there's an entry, and again, I mean, if that's entry, you know, there's two trades here. Stop loss, we've got the dots. You can go under the dots or the previous low, but keep your risk consistent. Okay, so now in both cases, entry target 1 is reached, in this case target 2, 2-to-1 risk reward. We could see some continuation possibly with this. If you're in this trade and you've closed 70%, this is already a winning trade regardless, okay? So if the stop gets taken out, it won't really matter. So you could leave your stop loss where it is and see what we get out of it. So this is how we definitely capitalize, and the occasional stop loss that does get taken out then is irrelevant. Okay, so if you manage your risk well, set and forget, don't move your stops, you'll do well. Let's just go back and have a look at this. This is a 3-minute chart, no technical analysis. Let's say we took every one of these. All right, well, we know that that's a winner, that's a winner. Here we go. There's your signal. We're looking for the triangle after sell. We actually had a gold sell last night, wherever your stop loss was, maybe above the cloud here. Look at the outcome. There's the breakout, a little bit late and not an easy play this one, but just consider that we have a price gap under here. Okay, it did pull back that far, but it might not have been an easy trade to take, this one. So let's just say we didn't take that. Okay, some of them are a lot easier than others. Okay, you wouldn't take these because we need to see, after the dot, we need to see a green triangle. Okay, so they're out of the question. What we're looking for is the dot, the triangle, and the pullback looking to rebalance. Okay, we've got the dot, the triangle, the pullback, short. Look at the outcome. So really all you need is a 40% win rate to be profitable if you manage your trades well. Okay, so here's one that may not have worked, but we do have another short. And the other way to increase your win rate is to trade with the higher time frame trend. So if the higher time frame's bearish, you won't be taking these green pullbacks. But you want to back test this because you might find that the number of winning trades you get taking every one of these signals far outweighs an occasional loser. Okay, dot, triangle, pullback, short it. Nice outcome. This one here, dot, triangle, pullback. Well, let's have a look at that. If you ran with the strategy, dot, triangle, the pullback down, stop loss under the previous low, there's a winner. T1 reached. See, the win rate is pretty good. And then we shorted that one. So far 100%. Here's another setup right here. Look at that. Dot, triangle, short on the pullback. Dot, triangle, short on the pullback. There's one loser. Okay, so this is where, when you manage your risk well, having one fall over is the cost of doing business. Basically, it's part of your business expenses. When you consider how many of these you've got running, 30% still trading, look at that. And these trades here, are they still in there? Well, that one, you could leave that in. And, I mean, look at the outcome. Okay, so what we're talking about is if this is worth $100 today on your account, okay, you've lost 100, but what did you gain here and here and here and here and here? Okay, so weigh up the benefits. Okay, so the way to get good at this is back test it. That's another winning trade. Pull back in. Back again. I just had a phone call. So bottom line with this, with these signals, just taking all of these has given us a 9 out of 10. And here's the thing. It's these opportunities here that give you your payday. Make it all worthwhile. So if you're getting an 8 out of 10, 7 out of 10 win rate, be consistent, manage it well, and let these run. Guys, gain access to the indicators. This is a gold trade we had last night. That was the outcome. We're still in this trade. That went into VIP over here. You can join from $10.95 a month. Click up here, join VIP. You can see the full history here going back 104 trades, I think. About an 84% win rate. These are the trade signals sent to VIP. Join us from $10.95 a month, and there's other options in here. Guys, do the math. Okay, with that, I hope you have a great day. Safe trading. We'll see you in the next video.